It's an hour before the open on Friday, January 7th. Hello, traders. We got the jobs report coming out in about 10 minutes or so. Is good news bad news? Well, we're going to find out pretty soon. Good news being lots of jobs. We got a really strong ADP report a couple of days ago. 807,000 new jobs created during the month of December in the private sector. Excellent number. I believe about 450 was expected. We should see a pretty decent jobs number today. The fear is going to be that lots of jobs is going to put upward pressure on prices and it's going to force the Fed to tighten sooner than later. Higher interest rates are not necessarily good for the market, at least not initially, because investors are worried that the Fed is going to slam on the brakes too soon and that is going to impede economic growth. So that's always the concern that's out there. Personally, I love it when people have jobs. The one thing that I do want to watch very closely is the wage component. Hourly wages, if they're above 0.6%, I think that could be problematic because that is inflationary. Largest input cost for companies is wages. So that is a market concern. Higher inflation, the Fed has no longer used the term transitory. They see inflation as being persistent. This would move them closer to tightening if we start seeing wages really increase quickly. So keep an eye on the hourly wages component. This is all fundamental mumbo jumbo. If you're a short-term trader, follow price. We really don't care. All we care about is the reaction, the price action that takes place after the number. So we'll be watching it very carefully. Let's take a look at yesterday's pick. For day trading, it was a stinker, but I really was highlighting this more for swing trading. That was the premise of my video yesterday before the open, was that we've been waiting for a market dip. We've got the market dip. We're down to the 50-day moving average. This is where you can start entering some bullish put spreads. But CVS did not demonstrate relative strength. In fact, it sold off hard. Well, Pete, doesn't this mean that it's going to go down? And shouldn't we be bearish on this stock? We've seen a ton of sector rotation. What's hot yesterday is cold today. What's cold today is hot tomorrow. This is simply some rotation out of the stock. And we needed that pullback. We had to have it so that we could get the stock down to a point, and I've drawn a line here where I would be interested in looking at a bullish put spread. I would love to sell the 97.50, 95 bullish put spread on CVS. Well, I'm not going to be able to get any credit for it with the stock up here. So I set a GTC alert line right here around the $100 level. If it gets down to this level, I could probably sell an out of the money bullish put spread with 3 weeks till expiration. It expires before earnings, which hover over the E is in a month. Sell that 97.50, 95 bullish put spread for 50 cents. It expires worthless. That's going to be a 25% profit to me. This is a line in the sand. That is a really nice horizontal breakout. That bullish put spread is going to be all the way down here. Way, 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 way out of the money. If I can get the trade off on a nice big market drop, I'm going to be interested in it because as soon as the market finds support and rebounds, the stock will also find support. We've seen that there are buyers lined up in this name, and the stock will bounce and time decay will work its magic. The spread will expire worthless and the stock will continue to float higher. That's the type of play I'm looking for. I would not be overly aggressive right here because as I've mentioned to you, I'm expecting to see another leg lower. Quick look at the 5-minute chart. Come in yesterday. Pete told me to buy CVS. It's a strong stock. I really like it. Well, you've got a downward sloping trend line here. You could have bought it. I didn't see any relative strength in the stock yesterday, so there was no reason to buy this stock. We'll put that indicator up and you can see down, down, down in here. It finally pokes into some relative strength right in there. You could have made a little bit of money in it, but it didn't do what I expected. So, no, you should have stayed away from this name. And in fact, the market really didn't give us anything to trade off of yesterday. So, we'll take a look at the market now. And we've already seen, and I reviewed this in yesterday's video, so please go back and watch it. The point is, when you get a red candle off of a new all-time high, there is follow through selling. So I'm expecting to see some follow through selling. I also believe that we're going to see market support in the next couple of weeks because buyers are typically very engaged heading into earnings season. There's a lot of optimism that's built up, especially when the mega cap tech stocks are still on deck. So any decline that we get today, tomorrow, the next day is going to be a buying opportunity. We just have to wait for that support. Maybe we get down to the 100-day moving average. If we get down to the 100-day moving average, know this: we are not going to be there long. So you'll have to act quickly. That means that you need to get your picks in order right now. You see that big drop down. Oh, here we go, testing the 100-day moving average, and then the rest of the day is spent tick, 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 running up, bullish hammer. This is where you want to get aggressive. Here's where you want to get aggressive, selling out of the money bullish put spreads below that major technical support, below those 100-day, 200-day moving averages, below horizontal support. Why do we do that? Well, I got two very lengthy videos on that on my YouTube channel, so please watch those. Each one of them is an hour long. But the idea is that we're going to be leaning on that support level. That increases our probability of success because we know that buyers are aggressive at those levels, and that will provide us with an extra layer of support. Same with CVS, going to that daily chart. I'm very confident that there are buyers right at this level here, that massive breakout and that follow through. So we're going to go in and take a look at stocks that I think are going to set up well. I'll show you how to find them. Really easy, not going to spend a lot of time there. I'll show you a couple of really good picks that I've got. And I want to spend time on the 1OP indicator because I'm getting a lot of questions on how to use it and how to trade it. So first of all, you know from my videos, context, 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 context. It's super important. So yesterday, we come in, we have this nice little rally, which in my pre-open market comments and in my video yesterday, I described the ultimate day trading pattern that I was looking for. I was looking for a bounce off of this close right here. That was the close on Wednesday. Typically, when you close on the low, you're going to get at least a little bit of a relief bounce early in the day. That's what we got, and then I was waiting for that to peter out. I did not want to see a huge rally up because the higher we would have gone on that bounce, the more strength it would have shown. But if we had a meager little bounce like this that instantly reversed, and there's your long red candle taking out the open of this green candle, that is a bearish sign. We also had a bearish 1OP cross forming at the same time. Took a short here. I think I made about 15 points on that S&P move. And then all of a sudden, we start kind of shifting gears. We've got this low, and we have a bullish candle here. This is a bullish hammer. Pretty nice. We've also got a bullish cross right in here. So we traded this signal, made, I don't know, I think about 10 points on the S&P on the way up. And then conditions got very, very choppy. There was not much going on. So once you got this initial move, here's the mindset that you should have been in. Okay, we've played both sides of the market here. We've had mixed long green, long red candles, and now we're just chopping back and forth, and we are trapped inside of this first hour range. This is when you should pair your trading way, way back because there's no momentum. So as I'm doing my analysis through the course of the day and I'm looking for market direction, here's how I start looking at things. I use the 1OP indicator to help me identify cycles. And when cycles line up with the individual stock and the market, that's your window of opportunity. So in here, we've got the market down, down, down. I'm watching the 1OP indicator fall. This is all great. What I'd like to see right in here is I would like to see a very short rest period, no more than 20 minutes, because that is what's going to indicate to me that the sellers are still engaged. When you have very, very shallow, very, very brief bounces, that tells you that the selling pressure is still there. Like right here, down, 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 down. Okay, here's our brief little pause. If we had spent a half an hour to 45 minutes rallying on that bounce, that tells me that support here is very, very strong. If we can't get off the deck and we spend 10, 15, 20 minutes here, that is a bearish sign, particularly when we can't clear the open of that red candle. See you later. So down in here, I'm watching these candles going, okay, are we going to get above the open of this red candle? We're going to get above the open of this red candle. If we bounce, it's okay, but we're early in the day, so I need to play it cautious. That's why I took profits here on this bullish hammer right in here. Went to the sidelines. Okay, let's see what the market does here. So now we get the relief rally and we get the bullish 10P cross. After we get out of the position here, this is where I started thinking, I'm not really sure what the market is going to do in here. I don't have a clear sense because we've gone both ways. Here on this bullish 10P cross out of a deep, deep trough, here's what I'm expecting. Okay, now we're going to reverse course. We've got these nice candles in here. Everything looks good right until this candle here. What I'd like to see is a nice candle that just pauses here at the top of that green candle and then another green candle through. That tells me that buyers here are still engaged. They have the upper hand. So during this bullish 10P cycle, this is a cycle, that's a cycle, that's a cycle, this is a bearish cycle, this is a bullish cycle, that's a bearish cycle. During these cycles, it gives us time to evaluate the market and the price action, and it helps us set up different scenarios that might unfold. So as we get into this part of the cycle right in here, I'm looking for continuation. If I don't get it, then this bearish cross tells me that, hey, you know what? This might have been just another bounce and the sellers could come right back and take out the low of the day. So we wait for this. If I'm a stock buyer and I've been able to ride this little bounce in the market, I take profits. Let's see what happens. Let me observe right here. Let's say that I've got a really nice stock lined up. It's in my sights. Yes, I love XYZ. XYZ is so strong. My God, the stock is going to run. Look at it go. Should I buy it now? No, you got a bearish 10P cross. Why don't you wait and see what happens during this bearish cycle? See if the stock is able to hold its own. See if the market is pulling back, because when that bearish 10P cross happens, we're expecting ka-chunk, 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 market down. Well, if that happens, the stock is probably going to retrace. If the stock doesn't retrace, there's information in that. It tells us that that relative strength is super, super strong. So you're watching, 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 watching. Okay, there goes the bearish cycle. Market did not sell off. That's a good sign. Stock continued to inch higher. That's good news also. Now we're coming up on a bullish cross right in here. So I should have the market releasing higher during that bullish cross. And if that happens, the stock is going to take off like crazy because it has performed very well during this bearish cycle. So this would be your entry point on the stock, provided that it is continuing to show relative strength, because now we know stock is strong, market is strong, bullish cross 10P, be in that stock. So now we have this bullish cycle. You get this nice long candle right in here. Let's talk a little bit about this because there's some information in here. You're a buyer, you're looking to get long the market, you're super excited, but you're trying to be patient. Compression, 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 compression. Oh my gosh, look at this thing, inch higher, inch higher. Gosh, I'm getting a little bit more nervous because I really want to get in, but I'd like to see that breakout first. Boom. There's your breakout. I got to get in. This is it. This is the moment I've been waiting for. Same thing holds true for sellers. Short sellers sell, 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 sell. So they're all like, okay, this thing should start rolling over here pretty quick because this resistance level has been in there for a while. And then, ah, where did that long green candle come from? This is all program driven. This is to excite bullish speculators. You get in and you're all excited because that's going to be the next candle, and that's going to be the next candle, and that's going to be the next candle. Same thing with the shorts. They're like, oh my gosh, I got to shut this trade down because you're taught this is where you want to short, sell high, buy low. So I'm going to keep my stop really, really close to that high of the day, right in there. As soon as it's breached, that's where the stops are. So this is just hunting for stops. As soon as those stops are triggered, as soon as those bullish speculators rush in, wham, the door gets slammed. And this is a reversal that is what I would call a tiny little buying climax, more just to trigger those stop orders and to entice bullish speculators in, and then you start drifting lower because anybody that was in here is trapped and now they're starting to puke their positions out. But this series of candles, all of this, now we know, we knew back here, but now we know we're going nowhere. Market is going nowhere fast. So start getting into the later part of the session. Here we go, bullish cross. This would be a good opportunity to enter those bullish stocks. I'm going to wait through this whole process. There's no reason to trade a sideways market, even on a good stock. Just wait for your opportunity. Here it is. Now I'm going to start buying stocks, downward sloping trend line, breach to the upside, buy signal 10p. Awesome. This is my entry point right in here. Uh-oh. Better start taking profits. There's another long green candle. Gave up that long green candle on the next two bars. That is a buying climax. Exit those, and there's your short signal, and there's your bearish cross. So, and we actually did trade that bearish cross into the close as well. You could look at the indicator and go, oh my God, look at all this chop. This is no good. In and out and in and out. Anytime you have a sideways market, I don't care what indicator it is, when you got 10p hovering around the zero line back and forth and back and forth, this in itself is information. It's telling you, don't trade. There is nothing here to trade when you get big spikes, deep troughs like that. That's when you want to trade on a relative basis. This was a nice little spike because it got us back up to that level. But if you take a look at how well the 10p indicator does, all you have to do is go into, let's go into a 15-minute chart because it'll be easier to see. When you get the 15-minute and the 5-minute lining up, that's a super powerful indicator because it's going to help you take out some of these signals where you've got nothing but chop. Beautiful short. Lots of opportunity to take profits. System did get long here, lost money there. Here's your short coming up right there. Caught that 100-point S&P move. I could scroll back, but what do you think you're going to see? If I scroll back, what are you going to see? You're going to see disappointment. Why? All I got to do is go to the daily chart. Look at the last 7, 8 trading days. Compression, 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 compression. Doji. You're not going to have any trading system that does anything in a sideways market. I'm sorry. Here, you betcha it's going to be really, really good. So you have to have that momentum, and then the signal on multiple time frames is going to work out super well. And that's what we're going to work in the chat room. I actually do have the S&P 500 across 4 different time frames. Got to keep this short, got to get going. Let's see if we can find some stocks. Let me close with one comment because we always start with the market. S&P down big, Doji. That means that all of these losses held firm yesterday. We've got about a 10-point rally in the S&P right now, and the news is out. So haven't had any reaction to the jobs report. So whatever the jobs report was, didn't matter. Futures have not moved on the news. So we have this Doji right here. Now, we could go higher. I suspect we're going to go lower because asset managers are not going to be aggressive on that type of a candle. They want to see that low. They want to see that 50-day moving average tested. They want to see if it's legitimate Look for another wave of selling. Be ready to sell those bullish put spreads as we get down to the 100-day moving average and confirm. Confirm. We need to confirm. We don't want a big close below the 100-day moving average. If we see that, we have to wait. This is more selling than we've seen in a while. Profit taking, most bullish period of the year, profit taking, profit taking. That's a warning sign. Error on the side of caution. Get some bullish put spreads on right now with your really strong stocks. Wait for that major support to be tested and then be ready on confirmation. How do I find these stocks? I've added something really, really nice to Option Stalker recently. We have 1 OP for all stocks, and we have that on a 5-minute, 15-minute, 30-minute basis, all the way up to a daily. We can expand this pane, and we can see how the signals line up across multiple time frames. Hey, BAC, maybe bearish short term, but longer term, not too bad. Excuse me, there's BAC right there. You can see, hey, D1, H4, H2, not bad. Only thing that's missing is the M5. So this makes it very easy for us to visually go right through the list. And I've used the most basic of lists in Option Stalker for this exercise. If I were looking for some really decent day trades on the long side, well, I've got the 30-minute, the 15-minute, and the 5-minute right here. So if I'm looking to get long, all I'm going to do, I'm simplifying this, but this is how easy it can be for you. I'm going to go down, I'm going to see what is on a 5-minute, 15-minute, 30-minute bullish list. Okay, look at BAC, really holding those gains well. It does have some technical resistance to get through. If I notice a chart like that, I'm going to click on that bar right there. I'm going to drop an alert line. Let's continue to go down, and then we'll find a bearish one. IEF, yes, some of the sector ETFs are in here. That's super weak. I'm just going to continue to go down. We're going to do this very, very quickly. And I'm going to look for initially these green bars. VXX is up because the market has been down. XLE 5, 15, 30. Let's look at that. Hey, that's pretty nice. Horizontal breakout. This is an ETF. Energy sector. Oh, I may want to focus on energy stocks. That would be a pretty wise move. So let's see if we can find anything else in here that looks good. I may not be able to use the 5-minute, but I can look for 15-minute and 30-minute. And we'll go into LVS, take a look at that. Nah, nothing really good there. But I know if I am persistent here, IGT, let's take a look at that. Not too bad. Get the major moving averages up there. You can see how easy it is, but we've also got searches, so we can use those as well. Nice little horizontal resistance. Yes. So I'm looking for day trades because I'm sticking with the shorter term time frames right in here. And I'm going to go up and continue to look. Here we've got a stock with a 15 and a 30-minute. Oh, hey, Ford, beautiful compression, big breakout. Look at that stock hold up well yesterday, even close higher, challenging the all-time high. Yeah, I would say that's probably going to have some pretty good day trading opportunities on the long side for me. So let's go through the short side and see if anything is on a sell signal. There we've got a sell signal across multiple time frames, got a breakdown through a compression, long bearish hammer right there. Oh yeah. By the way, if you start seeing a lot more bearish trades and the bearish trades start working out much better, the price movement is much easier on the short side. That is a warning sign that the market could be getting ready to go down. Here's a stock long-term uptrend. You can see it visually broken to the downside. Got a 5 and a 15-minute bearish signal on that. Yeah, that could be one that you want to look at on the bearish side. So with all the searches, this is the process that you go through. Coca-Cola reaching up here, getting a little bit of a pullback. I would not short a stock like that. Those are the ones that we want to be buying. I'm going to go really quick through here, see if anything else sticks out. QS, nice little breakdown there. That's weak. So let's use that same premise and let's go in and look for a stock with a trade signal longer term, H2, H4, D1. Let's look for relative strength on H4, D1. These are going to be likely swing trading candidates when we get that market flush out. So we've got option liquidity -1. This would be the list that I want to go through. I'm going to put it off to the side, and I'm going to look for anything that looks good and is not too overextended right now. I'm just looking for a possible bullish put spread that I can sell. DVN right here, got a nice breakout at the $45 level, get a little bit of a pullback in the stock. You can see we've got some time, about a month before earnings. That's good. I would like to play this breakout right here, and I would like to sell a bullish put spread below it. So that's what I would be looking for. GTC, click the bottom of that candle, stock comes in, I'm going to know about it. That will give me a chance to get that trade off. DWAC, very light volume here. Visually, I'm just scanning through the list to see if anything comes up. MRO, nice breakout here. Yes, down below the $17 strike price. That could set up well. We're starting to see some interest in utility stocks. That's AT&T, UPS, delivery. Yes, that's actually had nice strength. Got the 50-day moving average down here around the 207.50 level. Yes, any little bit of a pullback here would be good. You can see market down big the last 3 days, stock compressing near the all-time high. That's a good sign. Let's see if we get a little bit of a market pullback. Let's see if we test that level there. If we do, I could probably go down and sell the 207.50, 205 for a 50-cent credit. That would be a nice spread. That's how we do it. What do I have for you as far as a trade of the day? I haven't really found anything too compelling, but I've shown you the type of stocks that I'm going to be looking for. Today, I don't know what the market's going to do. We've got a 10-point rally in the S&P 500. My favorite scenario right now. And you can see that on these long red candles, we'll go back and see if we can find any retracement. There's one, and then we get some follow through. We don't have a gap down today. I think the market's going to try and rally into this long red candle, and it's going to try and put something together. Maybe get up to the high of yesterday, maybe into the middle of this red candle. How we attack that, the middle of that candle up here, is going to determine how I position myself today. So, couple of different scenarios. There are many different scenarios that could play out today. Got the unemployment report, so it's big news. If I see long green candle, long green candle, long green candle, stacked consecutively, closing on their highs, very little overlap, that's a very bullish sign that tells me we're in for a bullish day. If I see green candle, nothing, red candle, nothing, just kind of back and forth, that's going to tell me that it could be a very quiet day for us, and we're probably going to be trapped inside of Wednesday's range. Wednesday we had a big range, so very, very likely. So tiny little bodied green candles that don't get very far, then I'm going to be expecting that the sellers are going to come in and test the downside. So with the S&Ps being up 10 points, with the market selling off hard the last few days, my ideal situation will be something like this. Try. All of a sudden we hit resistance. We don't get very far. 10-point rally, nothing big, and then blam, big red candle. That big red candle alone is not enough, because that just could be a shakeout bar. You need to have that follow through. If you get that follow through, then you know that there is some legitimate selling pressure and you've got a decent opportunity to short. So those are a couple of the scenarios I'm looking for. If that reversal comes and you've got some long red candles stacked like this, and you start easily taking out the low and reversing, then we could actually see a bearish day and we could challenge the support from yesterday, that being the 50-day moving average, and then we would start to move closer to that 100-day moving average. So Watch the price action today. Try and get some bullish put spreads off. Not a lot, maybe a quarter of what you'd ultimately like to have done. And if the market rallies into earnings season and you don't get any more of those positions off, it's okay. You're going to make money on those trades. You can't always push it full tilt. We've seen heavy selling pressure the last few months, so you need to expect that, hey, there could be a second leg to this market decline. And if that happens, then I can spread my wings. Then I can get a little bit more aggressive. So don't fret that you put 25% of your bullish put spreads on here and then the market took off and I didn't get all of my bullish put spreads off and I'm not making enough money. Well, you didn't have the risk either of having the second shoe drop. And on that drop, you would be fretting. You would be wringing your hands. You would be going, oh my God, I should have been more patient. I should have known. Be in control. Watch the price action. Scale into positions. Scale out of positions. Give yourself some wiggle room. Sell out of the money bullish put spreads on strong stocks. Let time premium decay work in your favor. Let probability work in your favor for those longer term swing trades because we are volatile now. Volatility is starting to increase, and that you need to be aware of. Have a great weekend. Please leave your comments. We'll see you Monday. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.